Thank you very much, our viewers, for continuing to follow us up on this particular episode or journey of demystifying what a derivatives market is. We've been setting the foundation, and today I want us to go deeper into the application of the derivatives. Now that we know what we know about the derivatives, what is the starting point? What can we immediately buy? What is easily accessible for you to buy today or tomorrow, whenever you're available? So welcome back, Jeff Odundo. I was just reviewing the materials, information deck, and what really caught my attention is that there is actually now an index portfolio, something that we as investors we've been looking forward to have. You can actually buy an index, an NSE 25 index portfolio. Please tell us more about this. This is huge. We need to be screaming about it.
Now, thank you very much, Bias. Now, one of the things that investors are increasingly looking for is how do they get exposure to your most active companies on the market. Now, one way of getting exposure is actually buying each of those companies. And then taking them according to the percentage that I want, right? So that's one way of acquiring them. The second one is to actually buy a contract that is tracking the performance of those 25 companies, and that is what you call the index. The index is basically
one investment
into
all the 25 companies,
capturing the 25 companies, depending on the kind of weighting they have in the market. So if you have Safaricom, it's about 40% weighting. That index will track that weighting and also track the value of Safaricom and the volume it trades. If it's breweries, etc. So it'll actually track your weighting. It tracks the volume that you trade. Just to look at the liquidity and also the price
and the constituents of
the constituents. So we have provided in one contract a portfolio of 25 companies, the most active companies on the exchange. Meaning that today, if the value of the exchange goes up, the value of the portfolio will go up,
and the value of my contract
will go up. If the value of the exchange comes down, that way. So you've de-risked your portfolio in that how the market operates is the same way your portfolio will operate.
Absolutely.
Okay? So if the market goes up, you're tracking it up. If it comes down, you're tracking down. And then the cost of buying this 25 is greatly reduced because the contract is a lot cheaper than you taking a direct exposure
in 25 companies.
Because you pay a percent of the total value of that contract. Correct.
Wow.
So it's a great one for investors.
So you're saying when there's a bull run,
correct,
or you suspect there's going to be a bull run,
there's always a bull run coming.
You don't have to buy 25 stocks in the Nairobi Stock Exchange.
You don't have to buy 25.
You only need to buy the index portfolio. That gives you exposure to the 5 portfolios, companies, and you experience the same upside as somebody who went in directly into the 25 companies.
Precisely.
And when you believe that the market is going to come down, you can actually you can sell the contract, buy a selling contract, meaning when the market is coming down, you're actually benefiting from the market coming down.
Precisely.
I mean, this is something we've never had before.
We
call it shorting the market.
It's shorting the market.
You can now short the market.
You can short the market. You can actually beat the market.
You can beat the market.
That's exactly what we're bringing in.
You've just enabled us to beat the market.
You've enabled us to beat the market.
Amazing. Amazing.
So it's
amazing.
So it's an awesome opportunity. For investors who are really looking at Kenya now. You don't have to really get into the actual stocks, but get an exposure on really a market tracker. And the beauty about the index, we have already created history on it. So you can see the volatility of that index. It's easy to measure. And you can predict how it will behave going forward.
going forward.
But you can't predict the individual companies easily.
Yes.
You have to go more deeper
Yes.
in research and analyze
Yes.
how they'll trend.
Yes.
So that's the kind of benefit you're bringing for you.
Amazing.
Correct.
So if you have a portfolio, an underlying portfolio,
Yes.
and you take advantage of this index portfolio,
Correct.
you actually beat the index.
You will beat the index.
You'll beat the index.
Now you will.
Amazing.
Certainly beat it.
And if you're not interested in beating the index,
Yes.
you can just expose yourself to the index.
Yes, expose yourself.
Buying this, and then you are
Yeah.
you have the economic benefits of that particular market.
And that's exactly what you're telling the market players,
Yes.
the investors.
Yes.
Don't take just a naked exposure
Yes.
to the market.
Okay.
Take an exposure,
Yes.
but also protect it using a contract.
I see.
That way, you will always be insulated to the movements.
Yes.
Okay, so that's really essentially the key benefit of this contract.
Jeff,
For long-term
you
investors.
use a very strong word, naked exposure. Can you just demystify for us? What is naked exposure?
It's I think the whole lesson's about not being protected,
Yes.
or not being insulated or covered. In fact, the opposite of naked is covered. Okay.
Yes.
So you're covering your position.
Yes.
I'm saying I don't want to be exposed to the volatility risk without any hedge or something that we can protect ourselves with.
I see.
So I've taken something to wrap it over, to cover it. So if I have taken up an exposure of the 25 stocks,
Yes.
and the value of those stocks go
Yes.
down,
Yes.
I've already bought a contract that will give me gains as the market is coming down. So irrespective of the position, that I will never fear the downside of the market,
I see.
because I've got something that is going to protect me
Yeah.
against that downside.
Yeah.
Okay?
Yeah.
So I've sort of matched the positions.
Jeff, I've got to take you back to naked exposure. I'm still not getting it. Just speak to me like a 2-year-old.
Okay.
How do you build up a naked exposure?
So today, if you
rather,
continuously,
yeah,
so
covered exposure.
I agree with you. So if I buy shares, I'm going to buy Safaricom, I'm going to buy breweries, I'm going to buy everything
In the spot market?
in the spot market.
Yes.
So I bought those shares.
Yes.
So if the value of those stocks go down,
Yes.
I just have to sit on them.
So is that what you
I'm
call?
na- I'm exposed. I'm naked.
You're naked. You can't change it.
I can't change that position.
Because you can't move as quickly as the market.
I
is
can't
moving.
move as quickly as the market, right?
You're naked.
So I'm sitting on an exposure,
An exposure.
a loss.
A naked exposure.
My position is loss.
Yes.
I'm naked.
Yes.
But if I had a contract,
You're naked. You're. The fact that you are not able to do anything
yes,
is exposing you.
it's exposing me.
It's exposing you.
I'm exposed.
You're
In
naked.
fact, I'm naked.
You're naked.
Get it?
Now that you're naked, we need
Yes.
to cover it.
I need to cover it.
How do
How
you
do I
cover
cover it? I buy a sell contract.
Yes.
Okay?
Yes.
That I'm saying,
In the futures
in
market.
the future, yes. So I've got a sell contract. Even if I buy the shares now,
Yes.
I'm going to buy a protector.
Yes.
So that if my exposure is exposed,
Yes.
there's something else that is going to give me value
Yes.
to reduce the losses
I
I'm
see.
incurring on this
I
side.
see. I also saw that we also can take
Single
single stock futures.
Right.
Just explain more.
So we have said that often we have got liquid companies,
Yes.
or companies that we think have got the right volume, the right weighting, and the right liquidity.
Yes.
And so we've identified these companies and said they're investors who have exposure, who have actually bought the stocks.
Yes.
And again, would like to also have an opportunity to, one, protect the side,
Yes.
but also I might buy the contract for
Yeah.
really trading purposes.
Yeah.
Okay, so I've got a Safaricom contract.
Yes.
I can't afford Safaricom the quantity I want at this cost.
Yes.
Why don't I just buy a Safaricom contract that will track the movement?
I see.
I have a view based on my research
Yes.
that Safaricom is actually going to go up.
I see.
All right?
Yeah.
So I'm going to buy a buy contract of
I see.
Safaricom. So from the position I take,
Yes.
as long as Safaricom value goes up,
Yeah.
I'm getting money.
You have the economic
I'm
benefits.
going to economic benefits.
Yes.
If I've taken a view that Safaricom shares are going to go down,
Yes.
then I buy a sell contract.
Yes.
And again, I'm able to track that.
Yes.
So I don't essentially have to buy Safaricom.
Yes.
I can buy the contracts that are reference of Safaricom.
I see.
You get it?
I see.
So that's really the benefit.
I see.
That the people who have got an interest in a particular stock,
Yes.
can actually buy that stock.
I see.
As a contract.
As a contract.
BAT, for instance, I really like BAT,
Yes.
but I can't afford the cost of buying 1,000.
It's very expensive.
It's too expensive.
Yes.
So let me buy a contract
Yeah.
that's tracking the movement of BAT.
Yeah.
And that's essentially what happens.
Yeah.
So I'm buying a good exposure at a lot cheaper price.
A lot cheaper.
Yeah. And I'm getting the same value of somebody who is buying
Yeah.
the actual stock.
The actual
Yes,
stock.
like-
So the single asset futures
Yes.
could apply where the stock is very expensive to buy in the spot market.
Yep.
Or it could be completely inaccessible
Complete
because
liquidity.
it's closely held. So
That's
there's
the question.
there's no liquidity.
That's also another benefit.
No
Yes.
liquidity.
The liquidity.
And therefore you just take as exposure in the futures contract.
Correct.
And you experience the upside and the downside of that stock.
That's essentially it.
Amazing.
Yeah.
Wow.
It's an opportunity for us to get more investors in the market,
Yes.
more liquidity.
Yes.
You rightly put a very good point about liquidity.
Yes.
Some of these stocks are so precious.
Yes.
People want to hold them for a long time,
Yes.
and I don't have access to them.
Yes.
So let me have a contract
Yes.
that's tracking the movement of those
Yeah.
products.
Yeah.
Just to get the benefits of how to trade.
Jeff, this is a game changer.
Certainly.
It's a
My
game.
opening statement.
Yes.
It's a game changer.
It's a game changer. So, as Jeff began this conversation, he said, after Safaricom, this is the next big thing that has happened to the Kenyan stock market, which is positioned to be the hub of investment in Africa. Thank you for watching. Stay tuned in. This is Pius Mushiri, Nabo Capital. Invest in Africa.